Hey there, gold bugs! Welcome to our another video, where we take a deep dive into the wild and volatile history of gold in the stock market. As one of the most valuable and sought-after precious metals in the world, gold has captivated investors, traders, and even ordinary folks like you and me for centuries. But its journey has been anything but steady, with soaring highs and crushing lows, booms and busts, and dizzying fluctuations that have left many scratching their heads. So, if you're curious about the rise and fall of gold and want to understand why it's such a hotly debated topic in financial circles, then buckle up and get ready for a fascinating ride. Let's take a trip back in time, shall we? The origins of gold as a form of currency can be traced back to ancient civilizations such as the Egyptians, who used gold as a symbol of power and wealth. The metal was also used by the Romans and Greeks for their coins and jewelry. In fact, gold became so prized by these early civilizations that it was often used to adorn their most important buildings, statues, and even tombs. As trade and commerce began to flourish, gold became an increasingly important medium of exchange. The first gold coins were minted in the Kingdom of Lydia in what is now modern-day Turkey around 600 BC. These coins quickly spread throughout the Mediterranean world and were eventually adopted by the Romans. Before we continue, be sure to check out the link in the description for more information and resources related to this video. In the Middle Ages, gold continued to be used as a symbol of wealth and power. Kings and queens adorned themselves with gold jewelry, and gold coins became a common form of currency throughout Europe. However, it wasn't until the age of exploration in the 16th century that gold's true value was realized. When European explorers discovered vast reserves of gold in the New World, the metal became a crucial component of global trade. Spanish conquistadors exploited the gold mines of the Americas and brought enormous quantities of gold back to Europe. The resulting influx of gold led to a massive inflationary spiral that lasted for centuries. In modern times, gold remains an important symbol of wealth and power, and its price continues to fluctuate wildly in the stock market. From the ancient Egyptians to the modern-day investor, gold's journey through history is a fascinating one, filled with twists and turns, booms and busts, and a legacy that continues to this day. When Christopher Columbus first set sail for the Americas in 1492, he had no idea what riches lay in store. But just a few decades later, Spanish conquistadors had uncovered vast reserves of gold in places like Mexico, Peru, and Colombia. This influx of gold had a profound impact on the global economy and helped to establish Spain as a dominant world power. The discovery of gold in the New World led to a massive increase in trade between Europe and the Americas. Spanish merchants shipped gold back to Spain by the ton, and this newfound wealth helped to fuel the expansion of the Spanish Empire. The Spanish used their wealth to fund military campaigns, build new colonies, and establish trade routes across the globe. But the discovery of gold also had some unintended consequences. The influx of gold into the European economy led to a massive inflationary spiral that lasted for centuries. Prices skyrocketed, and many people found it difficult to afford basic goods and services. The discovery of gold in the New World also had a profound impact on the people who lived there. The Spanish Empire exploited the gold mines and enslaved thousands of indigenous people to work in the mines. The extraction of gold had a devastating impact on the environment and led to the destruction of entire ecosystems. Today, the legacy of gold's discovery in the New World continues to be felt. The global economy is still impacted by the production and distribution of gold, and the environmental and social impacts of gold mining are still being felt in many parts of the world. If you're enjoying this video so far, we'd love it if you hit the subscribe button and give us a thumbs up to let us know you're liking the content. After World War II, the world's major economies gathered in Bretton Woods, New Hampshire, to establish a new international monetary system. The system was based on the U.S. dollar, which was backed by gold at a fixed exchange rate of $1.35 per ounce. This system became known as the Bretton Woods system. Under this system, other countries' currencies were pegged to the U.S. dollar, which in turn was pegged to gold. This meant that the U.S. had to maintain a fixed exchange rate between the dollar and gold. To do this, the U.S. had to keep enough gold in reserve to meet demand from other countries. However, as the U.S. printed more dollars to fund the Vietnam War and other expenses, it became clear that there was not enough gold to back up all the dollars in circulation. In 1971, President Nixon announced that the U.S. would no longer convert dollars to gold, effectively ending the Bretton Woods system and the gold standard. This move was seen as a major shift in global economics and paved the way for the modern monetary system we have today. Now, gold is still considered an important asset by many investors and central banks. It is often used as a hedge against inflation and currency fluctuations, and its value continues to be influenced by global economic events. The collapse of the gold standard marked the end of an era, but the legacy of gold's role in global economics continues to be felt today. Now that you have quite a good idea about gold and its history, you might be wondering what exactly drives its value. Firstly, the supply and demand of gold plays a significant role in its price. Gold is a finite resource, and mining companies can only produce a certain amount each year. This means that any increase or decrease in demand can have a significant impact on the price of gold. When demand for gold is high, its price tends to increase as buyers are willing to pay more to acquire it. Secondly, geopolitical events can also impact the price of gold. Political instability or conflict in major gold-producing countries can lead to disruptions in the supply chain, causing the price of gold to rise. Additionally, global economic events such as a recession or stock market crash can lead investors to seek out safe haven assets like gold, causing demand to increase and driving up its price. Lastly, inflation can also impact the price of gold. When inflation is high, the value of currencies tends to decrease, making gold a more attractive investment as it is seen as a store of value. As a result, the demand for gold tends to increase during periods of high inflation, leading to an increase in price. It's worth noting that the price of gold is also influenced by factors such as interest rates, central bank policies, and technological advancements in mining. But overall, it's important to remember that gold is a complex asset that is influenced by a variety of economic and geopolitical factors. You can also use gold as a hedge against economic uncertainty and the limitations of this strategy. Gold has long been viewed as a safe haven asset, used by investors as a way to protect their wealth during times of economic turmoil. This is because gold is not tied to any particular currency or government, and its value tends to hold up even in times of high inflation or recession. The idea behind using gold as a hedge is simple. When the economy is uncertain or volatile, investors move their money into gold in order to protect their investments from losses. This can help to diversify a portfolio and mitigate risk. However, there are some limitations to this strategy. For one, the price of gold can be just as volatile as other investments. In fact, the price of gold can be affected by a range of factors, from mining production and demand to political instability and currency fluctuations. Additionally, there is no guarantee that gold will always be a reliable hedge against economic uncertainty. The performance of gold can be influenced by a wide range of unpredictable factors, and its value can fluctuate just like any other investment. This means that relying solely on gold as a hedge against economic risk may not always be the best strategy. Gold has been a traditional store of value for centuries, but with the rise of new technologies, investors have started exploring other options for diversifying their portfolios. One of the most significant developments in recent years has been the rise of cryptocurrencies, such as Bitcoin and Ethereum, which offer a decentralized and digital alternative to traditional assets like gold. Cryptocurrencies are powered by blockchain technology, which allows for secure and transparent transactions without the need for intermediaries like banks. This has made them attractive to investors looking for a new way to invest in a secure and decentralized asset class. The rise of cryptocurrencies has also had an impact on the gold market. While gold remains a popular investment, particularly during times of economic uncertainty, the increasing popularity of cryptocurrencies has led some investors to diversify their portfolios with these digital assets instead. However, it's important to remember that cryptocurrencies are still a relatively new and volatile asset class, and they come with their own set of risks and challenges. The price of cryptocurrencies can be highly unpredictable, and there have been instances of cyber attacks and fraud in the industry. That being said, There are also benefits to investing in cryptocurrencies, such as the potential for high returns and the ability to quickly and easily trade assets across borders. It's important for investors to carefully weigh the risks and benefits before making any investment decisions. And that's a wrap for our discussion on the impact of technology and innovation on the gold market and the rise of cryptocurrencies as an alternative investment. We hope you found this video informative and useful in understanding how new technologies are shaping the investment landscape. Don't forget to subscribe to our channel and hit the like button if you enjoyed this video. And be sure to tune in for our next video, where we'll be discussing Warren Buffett's recent investment in silver and whether it's time to follow suit. Thanks for watching, and we'll see you in the next one.